All right, I think we should be live. If you guys can see and hear me, drops a note into the chat on the right hand side. We're gonna still give it a little bit as we get some more people coming in. We're just about to kick things off here, so thank you all for joining. Please introduce yourselves. Okay, thanks, Terrence. Thanks, Ashley. All right, great. Thanks, Catherine. Awesome. Phil, thank you. Christopher, thanks, guys. Thanks for coming in. Thanks for joining, everybody. It looks like everyone's starting to drop their links and stuff into the chat. Please introduce yourselves into the chat. Drop your LinkedIn, who you are. Let's see where everybody's from also. The other cool thing about Hopin is you can actually go over to the People tab on the right-hand side of your screen, and then you can actually search for people and chat one-on-one with people if you want to message somebody directly. So thank you all for joining. Like I said, we're going to kick things off here in the next few minutes, and we're going to start bringing up some of our partners. Real quick, I just want to make sure that if you guys don't know who I am, or if you guys don't know about Entre and what we're doing here, we're building a social network for entrepreneurs. We've built out this community mostly through events, which are now virtual, with everything going on. So I hope everyone's, safe and healthy out there. We're focused on helping entrepreneurs connect with each other and really find their co-founders, team, developers, all the people they need to be successful. And we've actually just launched our app. It's just on iOS right now. It's invite only. We're going to drop a link. If you guys want to get into the app, we're kind of just letting some people into it as we continue to add new features and everything as well. We're going to be rolling it out to Android actually later this week. So we'll have both iOS and Android. Let me get the link for you guys. And this is just going to be a place where it's specifically designed for entrepreneurs. So we wanted to create something where entrepreneurs can come together, they can share ideas, they can be around like-minded people, and they can really connect and build their businesses from this place. And, with that being said, if there's anything that we can do to help you guys with your business, feel free to reach out to us. I know Jimmy's going to be, my partner Jimmy's going to be dropping some links in the chat for everybody for upcoming events. We have another VC panel next week. It's focused on like deep tech though. So like AI, machine learning, big data, drones, robotics, and kind of the future technology. So that's going to be a really cool event as well. It's going to be on Hopin again, so you guys can check that out. And, we're going to start introducing some of our partners here as people come in. For our speakers, I'm going to drop the, and I'm going to get Carlo up here from Select, our partner here. For the speakers, if you guys can join the back link, the backstage link again, just so I can bring you on. Okay, and let me bring up Carlo here. And we'll kick things off. Hey Carlo, what's going on? How are you?
Good, hanging in.
Fantastic. Well, I'm super excited to partner on another event with you. You guys have a great networking community with Select, and I'd love for you to share more about that with everyone, and they can learn more about kind of your membership and all the amazing things that you guys offer through your platform.
Yeah, absolutely. So we connect people with exclusive events, pricing, and perks at a little over 1.5 million different locations all across the world, as well as online. So we work with a number of the top restaurants, hotels, retailers. We're also starting to add a lot more lifestyle services, business services, all sorts of things that are sort of extra timely for people while all this is going on, from meal subscription boxes to discounts with various business services and that kind of stuff. But like Entre, we've taken all of our events digital for the time being. This is the second one that we've done together with them, and we're really excited about it. We think it's a super interesting topic about just sort of the fundraising life cycle of a startup. And I think kudos to both our organizations for sort of being nimble and moving into the digital arena very quickly as this thing has progressed. And it's been cool to see how many people are tuning in for these things too. And it's great to be able to give people a reprieve from the constant news cycle of coronavirus.
Yeah, exactly. I mean, it's refreshing. I think what you guys are doing too, and just giving people the accessibility to great deals and perks like through these times too, and just like discounts on, like you said, different, food stuff, all sorts of different things. I think right now it's extremely important for people to like have a sense of community, have a sense of people who are there to support them. It's a big part of what we're doing. I know it's a huge part of how you've built out Select and everything. And I think it's huge. If you guys look into the chat, Jimmy just dropped the link there for you guys to learn more about Select. Obviously, Carlo's going to be staying on the event. So if you have questions for him or whatever, I'm sure he's going to be dropping other links or his, LinkedIn. He's also very successful founder. I mean, Select raised a good amount of money and they've built a fantastic company. So if you want advice or anything from him too, feel free to reach out. Like he's a great contact and resource, good guy to know, put it that way. Yeah.
Likewise.
Thank you so much, Carlo. Is there anything else? Where can people find Select or anything else that you want to share?
Yeah, best place to find us is the website, meetselect.com. We're also on all the social platforms. Instagram is at the Select Card. I think Facebook is /SelectCard. And then we occasionally use Twitter. I think that's Meet Select or something like that. But and then I'll drop my personal links in here too.
Okay.
And feel free to hit me up.
All right. Fantastic. Thanks so much, Carlo.
Yeah. Thank you.
You got it. All righty. Let's bring up Surya from Neon Vest here. Hopefully this will work. Give it a second. Hey, Surya, are you there?
Yeah.
Oh,
can you hear
fantastic. Me? Yeah. You're good.
Yeah.
Fantastic.
Awesome.
Doing great, man. I'm excited to partner with you on this event too. And, I think with what you guys are doing, it's fantastic. Matchmaking founders with investors and mentors and stuff. I mean, it's really like important, for us too. And like, we think it's really valuable for that, which is why, we really thought it was great to partner with you on this event too. So I'd love to, have you share more about what you're doing with Neon Vest as well, just to give people, fill people in and see, how they can use your platform and benefit from it too.
Great. Yeah. No, and this makes a lot of sense for why we would want to kind of be a sponsor and work with you. I think there's just a lot of synergies there. So, I think you explained it well. So Neon Vest, what we are is we're essentially a platform that's bringing a lot of efficiency to the startup and investor communication landscape. I think just there's, startups need a lot of resources and they don't have enough time, and we're just helping kind of streamline being able to get in touch with investors with whatever it is they need. And so we started off with the premise of providing them with investor introductions and fundraising assistance. We're still going strong on that. We provide that curated matchmaking by really helping match them with the relevant ones. And for the investor, what we're doing is we are differentiating ourselves from platforms like AngelList and Seed Invest. They're all great, but we really put a premium on quality and making sure that we vet them beforehand. And so that's what's really adding value to both sides. And with regards to mentorship, we've recently gotten a lot of feedback from our customers and prospective customers that it's not just actually the fundraise itself. It's also, there's just so much more that we could benefit from by having this kind of white glove service where we connect to investors. We'd love to get assistance on our strategy, on kind of the market dynamics, especially with what's virus, on our marketing, on our operations. And so we want to also kind of provide them with those resources at their fingertips, directly to them, in just helping them with various aspects of the business, in addition to just fundraise. So
for sure,
it's that's and on the investor side, a lot of them want to give back and help mentor and help kind of provide this feedback.
Yeah, I think it's huge. It's one of the things that led me to starting Entre too, to just connect these entrepreneurs together. But the connection with the investors and that whole process, it's a mess right now, and like it's just filled with like warm intros and like who do you know and what.
Exactly. It just takes way
too long, and I haven't had any success really on AngelList or Signal or some of these other platforms that say they are LinkedIn or whatever. They say they're designed for that sort of thing. I've actually had the most success on Twitter, which makes no sense at all. But yeah, I'm glad that you guys are helping people with this. And Jimmy dropped the links over here on the side for your guys' startup application and the mentor application as well. I'm sure you're going to be around for the event. You can drop in, other links as well for people to learn more about NeonVest and everything. And then, if people want to message you directly as well, definitely drop in, your email or whatever. And for those for everyone who's watching and you're raising money or wants introductions to investors and stuff, like this is a great tool to use, and you guys should be, signing up for this and getting connected to investors. I mean, that's huge. So thank you so much. And if there's anything else that you want to say before we say goodbye here.
Yeah. Just, for anyone in the audience that's a startup or investor, go to neonvest.com. You have the respective links for signing up, and looking forward to hearing from all of you. Thanks.
Thanks, Arya. All right, guys, let's bring up our last partner here, Philip, and then we're gonna jump right into the panel.
Am I there?
Philip, you there?
Hey, yeah. How you guys doing?
Good to see you again. I'm glad to have another event with you. You guys are awesome, helping people build their technology and everything. You've been great for the startups in our network, and would love for you to obviously share more about Ideamotive and everything. But I also want to know too, like, what is how can you guys provide the quality of developers that you can at this affordable price point versus like other people here in the States, and like what are because for us, like we outsource development. Like I recommend most people as they're starting out, because entrepreneurs, startups, like when you're building your tech, you can save so much money instead of hiring developers in New York or San Francisco and whatnot. So fill us in, tell us about Ideamotive and everything.
Sure. Absolutely. Well, first of all, you're doing a really good job in describing other people's company. You did. I probably shouldn't have say anything more because you said the most important stuff. So yeah, Ideamotive, we do create software for startups. So probably startup is yours, anyone listening to this. So if you have a startup, if you have an idea for a startup or just a functioning company that could benefit from customized software, that we're probably the right people to reach out to, and which really makes me happy because a lot of people did. So it seems this community is really interested in building software and in looking for it for overseas, right?
Yeah.
So answering your question, this is pretty tough one. It has to be connected with labor costs here. So first of all, we don't pay for education here in Poland, so maybe that's a huge deal. We don't have to pay back the students' loan, but just everything here. I don't know if I mentioned that we are based in Poland and Central Europe. So everything here is so much cheaper than, for example, in New York. And it's not like our developers starve to death or anything like that. Just with the half salary they can make in New York, they can probably afford twice as good standard of living. So you can get a beautiful house by the woods just for a couple of $100. So they're doing real well. But that's a question I get very often. Like, why would you even look so far away if you have so many great like companies locally? And you probably can ask people like you. You also said you outsourced some. We have plenty of companies in New York, Boston, Florida. So you could probably ask them. But I'll try to give you hopefully a right analogy. So for sports, the best country when it comes to sport, Olympic Games, who gets all of the gold medals, not all of them, but most of them every year, it's obviously the great US, and it happens regularly. On computer science, on the other hand, it looks quite different because surprisingly, the US wouldn't, according to online rankings, wouldn't make it to top, or Berlin would make it to top 30, while Poland makes it to top 3 almost always. Which is something we can be proud of. Polish developers are always on the top. And being perfectly honest with you, I really don't know where this comes from. Probably the free education helps it out. But just that's one thing, and I know everybody who is looking for software development now is already know how can they benefit from our cooperation. But on the calls after the last event, I realized that here on this community, there's plenty of entrepreneurs who aren't maybe linked so directly with IT, but there is people here having great networks of contacts, and both ends could benefit. And actually, that's something, that's a model we started to already cooperation from people we talked here on Entre, and you can just benefit from recommending us to any other company who actually needs software development right now or graphic design, and benefit from our 10% commission programs. So actually, we have a great partner who's been charging us for 3 years. So imagine 3 years after introducing us to our customer, he's been charging us month to month, and we're happy to provide him his well-earned 10%. So that can be maybe a good way to earn your passive income. So basically, if you just wanna, this worked very well last week, so I think we can do that this week too. If you wanna just have a nice morning coffee, talk to me about startups or technology, or just wanna grow some of the extra income on the recommendation program, just hit me up. I'm gonna put in the chat a link to schedule a call with me. I'll be happy to talk to any of you. And as I did last time, I think it's a good idea for first 5 people who schedules a call with me. There is $500 for software development or graphic design, anything that can grow yourself, grow your company, or anything that can help you out sell something, some sales assets.
That's fantastic, Philip. That's an amazing offer. I think Jimmy put in the link here too. Yeah, if you guys put it in, Philip, you just added it as well. So if you guys go there, you can book a call right with Philip. You get $500 off your tech. So if you guys are on an app, website, software, whatever, they're gonna help you out a lot with that and give you a good roadmap. And yeah, so that's
no
fantastic.
additional requirements. So if you guys need something for $450, nothing to be paid, everything for free.
Yeah, that's awesome. Okay, wonderful. Thank you so much, Philip. He'll be around. Yeah, if anyone wants to message him too, he'll be around and you guys can chat. So thank you guys. Thank you, Philip, so much. All righty.
Thank you.
Okay. We're going to kick things off here. Charlie, you there?
I'm here.
All right, fantastic. I think we got – hey, Nikita's here. Okay, hello. Mario. Hello. All righty, fantastic. All right, great. I think we're all here. thank you guys so much for being a part of this. This is going to be awesome. I'm super excited for this. I'm going to pass it off to Charlie now. So I'll be around for everyone. I'll be hanging out in the chats and everything too, and keeping track of everything. But I'm going to pass off to Charlie. He'll be moderating it. Would love to obviously hear everyone's, you know what to do, Charlie. He's done this before, and we can jump into it. So thank you guys so much, and I'll kick it off.
Awesome. Thanks, Mike. Thanks, Mario. Thanks, Nikita. Thanks, Kunal, for all coming on the investor panel from Angel to IPO. Pretty excited about this. A little context, who I am. Charlie Stevens. I host a podcast called Leaders Live. We do it on LinkedIn Live, so definitely connect with me on LinkedIn. We have venture capital funds and other founders of 50-plus employees come on the show, and we talk about, basically their background and everything. Kunal's been on the show before. Mike has been on the show, even Carlo Select. If you hear a crying baby in the background, I have 3 kids in the background, so we're trying to keep that low, but one cries more than the other. Let's just put it that way. So let me hand it off to everybody else. Before we start, though, CharlieNYC.com if you want to see those past podcasts, and we'll probably get Mario and Nikita on for their own separate podcast because you guys deserve it, obviously. Little background, Nikita, RRE Ventures, Keeping Tech Weird is a good bio you have. I like that. A health tech, fintech, enterprise, but just doing a little quick roll call, right? So Kunal's with Hearst Ventures, the principal for, you got a little loud. He's at Hearst Ventures and talking digital media tech, and Mario is also with Charge Ventures. So Mario's got a really cool newsletter. You guys should all check that out. The Generalist, read thegeneralist.com. Kunal is a published author, 2 books, Finding Genius and Disruptors, where he's interviewing some of the best founders and venture capitalists in the world. But as we jump into this, Nikita, can you start us off, and we'll kind of go around, loop around, but give a little background on what you're doing at RRE, what RRE is, what the fund is focusing on, and everybody else can kind of go around and talk about their fund. So
yeah,
Nikita,
sure. I will kick off. Firstly, thank you for inviting me to be here with such great folks. Kunal, Mario, good to meet you. Your reputation precedes you. RE, we're a 26-year-old fund in New York, based in New York City, although we invest across Canada and the US. Kind of the origin story of RRE was really with Jim Robinson III, who's one of our founding partners. He was a former CEO of American Express, sat on the board of General Motors, Bristol Myers Squibb, Coca-Cola, some companies none of us have ever heard of, and was one of the first 4 VC funds really in New York City. So being connected to the Fortune 500 deeply at the C-suite and the board level is something that I think is really true to what we have always been doing and continue to do today. And I think that informs how we look at companies by sitting down and having a lot of conversations with some of our strategic LPs and some of these high-level relationships. What are these companies thinking about? And that helps us inform our own theses and the types of companies we look at and have conversations with. That's a little bit about like the origin story of RRE, but since then we've really invested across the board. Some companies that I think people might know: BuzzFeed, Datadog, Venmo, Vine, Collective Health, BarkBox, Noom. So I think from like a lot of those companies, you can tell that there's really a spread across the board, from healthcare and enterprise and cloud and some of the stuff that I focus on to e-commerce and crypto. So we really look at everywhere because there are many opportunities to invest, and we love being New York investors. A lot of our companies are based in New York or have really major presences there. And yeah, that's a little bit about RRE. Yeah.
It's exciting. You guys been around very well.
We've been around the block. Yeah. So if anyone want to talk recessions, I mean, we've done it before at our having those conversations, kind of, putting our finger to the air, trying to figure out what's going to happen.
Yeah, been there, done that, right? So Kunal, We'll go to Mario.
Yeah, sure. So I've been at Hearst Ventures for a little over 2 years. I'm a principal with the group there. Just as background on Hearst Ventures, it's been around for over 2 decades now. The first generation, Hearst, the corporation, has been around for even longer than that and kind of focused on traditional media. It has investments in newspapers and broadcast television and local radio. We have a minority stake in ESPN. So the first generation of the investment fund was focused primarily on digital media, and we made investments in BuzzFeed and Pandora and SiriusXM and Roku. The first investment was actually Netscape. So obviously we only talk about the good names, but there was a lot of other media investments in there too. As in the last kind of decade or so, Hearst has been evolving to invest in other areas of interest that have evolved out of kind of first investing in software businesses at the corporate level to help kind of bolster the media business and the ad business. And then it started to evolve into investing into new areas that Hearst can diversify into. So that kind of first started off with financial services, and we now wholly own Fitch Ratings. It evolved into transportation and mobility services. So we own a couple of companies called Kemp, which is a fairly large one in aerospace. And then we have a large healthcare division. So it's been fairly acquisitive. So we acquired First Data Bank, Healthcare Homebase, and a couple other companies on the healthcare side. So Ventures sits at the tip of that, where we are looking kind of for new areas of interest that might be of interest to Hearst in the future. So it has to be strategic in that sense, but really everything kind of flies. So we're looking at media investments still, but most of it has been focused on I've been spending most of my time on transportation, mobility, and healthcare. So we've made a couple of investments there. To date, we typically invest Series A through C. We've done some seed in the past, and we have a different arm where maybe some of the people in the chat right now might have heard about, called Hearst Lab, which invests in female founders at the seed stage. But primarily my role is more Series A through C, kind of $2 to $10 million checks. So that's what we say.
That's good. That's solid. Yeah.
Awesome. Yeah. I mean, you have 2 people from some of the most storied VC firms in the world. Charge is very much a startup itself. You know, we've been investing for about 4 years, invested in about 35 companies at this point, and really try and find folks at the very, very earliest stage. So as often as possible, we're coming into a pre-seed round when folks maybe, you know, just have an idea, maybe they have an MVP or a website, but it can be pretty unformed at that stage. And so it really becomes more of a question of vision than anything else, as I'm sure it is for both Kunal and Nikita as well. And so, you know, we try and keep things pretty generalist. We do a lot in mobility, healthcare, future of work, and just sort of like straight up B2B software, and tend to focus on New York entrepreneurs. But as long as folks are in North America, like very, very happy to hear from them, and excited to be with you all today.
Mario, let's stick with you real quick. As again, context for the different rounds and the stages, we're talking seed to IPO. We'll stick with you as the seed investor here. Can you talk about just when these companies should maybe start thinking about getting into these rounds, the size of the rounds that you're involved with, and then kind of, you know, what they should be using possibly for this money, but just how they should be thinking about the rounds of funding for each.
Yes.
And we'll go back to Kunal and Nikita at the end.
Totally. So, you know, we actually like to go pre-seed. So even earlier than seed. And, you know, that's happened, it's sort of begun to establish itself as a financing round as bigger and bigger venture firms move down the stack. Like seed rounds are essentially now becoming $3-5 million rounds. And so there's an opportunity, we think, at the angel round, the sort of friends and family round, for institutionals to play there. So we're usually investing in sub-$1 million rounds. And, you know, the answer of when is the right time to do that, I think it really depends on the type of business and the type of entrepreneur. You know, we see a lot of serial entrepreneurs raise what is, in terms of pricing and you know, as a deal, a seed round right out of the gate, and that's great. They can do that. For folks that are maybe just getting started, I think, you know, getting a little bit, even just sort of some micro traction on the board can really help push you through that sort of first friends and family pre-seed style round.
More mature rounds come available. They're trying to raise some more money. Kunal, I mean, can you talk about where you're at when founders are coming to you and looking for these rounds, and like how you treat it and how you kind of give them some advice on what to do?
Yeah, sure. I mean, I see a lot of the questions also in the chat are focused on COVID and whether all of us are still investing. Hearst Ventures is still investing. I think just similar to everybody else. I know this is a thing going around on Twitter now where everybody's saying that we're trying our best to still find investments that make sense. And kind of relating back to your question, I think at this Series A or B, we're looking really, Mario is investing in kind of great founders in the area of kind of all the areas that he just mentioned. And at that point, I'll rely on him and investors like him that are investing at the earlier stages to say, this is what we've liked about the founder and this is where we've helped them get in terms of the business. And then we start to look at very hard numbers and metrics and to see if we are investing in an industry like transportation mobility. Let's just say we're going after autonomous vehicles. We want to see that what kind of pilots have they entered into with larger companies in order to implement technology, or kind of what are they spending on doing that. So there might not be revenue there yet, but with some of the enterprise SaaS businesses, I saw someone else mention that when we're looking for businesses there, then there are real metrics that we're checking into. So it's less of a founder story at that point. I mean, that's still very relevant and very important, but there are some numbers that we're going off of to make that decision. And I think like in terms of when they should raise, I think a lot of the conversations that we've seen has been more around trying to raise from a position of strength, trying to get the company in a place where you've shown that there's been enough growth in the seed round, that spending has been in check, that they've managed capital well, that they've been able to use that capital to make kind of serious improvements to their business. So we're looking for some of those things, and the story should be very clear. I think there's still a problem where we meet so many founders that can't communicate very clearly what problem they're trying to solve. And I think that's a problem at the seed through all the way into IPO. So I think it's very important from a storytelling perspective that we want to see that happen. So that's sort of some of the stuff we're looking for.
Nikita, you're there. That's good. I saw you jump out real quick. You're there.
Yeah, I actually was figuring out what one of the buttons was doing. So always testing. Yeah, I think that both Kunal and Mario put it very well. When I think of the seed round, it's team and really market or problem fit. Like that's what I think about for the kind of pre-seed early rounds. When it's more a Series A, and those are really the two rounds that we look at, both the seed and the Series A. Series A is much more product market fit. And both of them covered really well, like the kinds of metrics that we look for. So maybe I'll make it more COVID specific, since it seems like people want to talk about that a lot. We, in addition to spending a lot of our time with our pre-existing portfolio companies for the previous 3 weeks, have also been thinking a lot about what makes a company survive through a period like this. And it's really, I mean, of all the things, particularly for the areas that we look at, it's being a need to have versus a nice to have. And when we look at some of our really strongest performing portfolio companies, one example I mentioned earlier, Datadog, no one's ripping out Datadog just because something like this is happening. There are always going to be things that when you look at how consumers are spending and how companies are spending, the things that they go, we can't just get rid of all of a sudden. We need these to function as a company. I need this to be a person at home living my life. And those are very different types of businesses that I think that have really come to the surface, and even as investors reminded us that this is why we're investors, to back these kinds of businesses. Right. So that's really like when we're looking at companies now, even looking at our own portfolio, is we're taking that into ourselves in terms of the companies that we're looking at. So when you're thinking about your business being built, I think you have to ask yourself the very same question. If you're the kind of person that's buying your own product, is this something that you're going to need to have during a COVID period? And if the answer is no, then maybe there's some kinds of questions you need to ask yourself about the company that you're building.
So, I mean, let's stick with COVID, right? I mean, we were going to jump to that towards the end, but we might as well weave in and out of this throughout the conversation. You know, we were going to talk about how is the best way to approach investors. Maybe they understand that their product fit works, and now they want to reach out to one of you or whoever may be the VC that makes the most sense. can you give a little bit of better idea on some of the best ways to reach out to investors, especially at a time like this where it's like, I don't think these people want to invest in me, right? There's no money going around. We got to be safe with their. So, I mean, one thing I've heard, just to jump in, is just kind of say, hey, keep me on your radar. And I think Jeremy Levine of Bessemer Venture Partners, we had him on a couple of weeks ago, and that was something interesting I think he said. But so I guess the question is, how best is it for a founder to approach you, especially at a time like this, and maybe some stories that have worked, but in like the cadence of possibly following up with you. But why don't we start with you, Kunal?
Yeah, sure. I think it is, it's interesting. Like, I think a lot of investors use that language of like, keep me on your radar and let's stay in touch. But I was trying to raise, I had a startup before this and I was trying to raise capital for that. And I think I just kept trying to do that to keep myself on investors' radar until the point where I feel like maybe it just wasn't useful and I wasn't spending my time the right way. And I know from a founder's perspective, like, when they need capital, they need it right away, and they feel like we need to go out there and try to raise as much as possible. But I would try to get through this period of uncertainty, because I think a lot of investors just don't know. I mean, Fauci doesn't know, Trump doesn't know, nobody really knows what the next couple of months look like. So you can't expect an investor also to know. I think we're doing our best to look at risk and say, okay, how does a company, if we were to pull the trigger right away and invest right now, how do they get through a period of uncertainty that looks like 3 months to 2 years? And what does that look like? But I think if a founder can, if he or she can withstand that for the next 2 months and know a little bit better about what things are looking like and what's going up and down, it might be better. But in order to get on people's radar, I don't think it's changed much from prior to COVID. I think you still get on an investor's radar based off of the things that they're looking for and looking at what types of businesses. I think all three of us made it very clear. Mario's investing at the earliest stages. RRE is investing in certain businesses that she's already mentioned. And the same thing for us too, is like, if we are looking at transportation mobility, and I'll be very clear that we're not looking at many direct-to-consumer businesses. So if you're a direct-to-consumer founder, probably don't reach out. And I think we make it very clear, and we try to make sense of what the areas that we're going to invest in. So I saw someone in the chat also asking, how do you build an authentic relationship with an investor? I think that's the way to do it, is saying that this is what you've typically invested in the past, and this is why I think it's of interest to you. So actually one founder did that. They looked at a couple of our investments, found a trend that's existed through all of them, and said, this is where I think you guys are investing. And we're actually pretty actively looking at that company right now. So I think there's still a way of doing it, but if you can get through this period of uncertainty without spending so much time of your own chasing investors, it's probably better just from a time management standpoint.
How about you, Nikita? You want to jump in?
I think that's completely right. We're using the exact same methods to find companies that we were doing before, which is our inbox, other investors that we invest with, chasing companies that we're interested in and spaces we're interested in. That I don't think that really ever changes. Even in a period like this, that's definitely what I've seen. I think and Kunal alluded to this, there was a period of the last 3-4 weeks where people were investing, yes, but I think that the focus was not really as much on new deals, just because you have a fiduciary responsibility to your own investors, right? Like, investors invest in VC funds, and then we invest in companies. Our responsibility is for those investors that invest in our funds to also say, we need to understand what's going on in the landscape. It's one thing to operate in a bull economy. It's one thing to operate in a bear economy. It's a whole other thing to just be like, what is going on? This is like an uncertainty economy. And I'm not going to just spend my money and spend your money if I don't know what the fuck's going on. Sorry, I didn't mean to. This is just me being honest. And so now that I think most funds, I'm speaking for RRE in particular, but I feel like most funds are now getting back into business. I'm saying, okay, we've taken a look for the last month. We kind of know what the conditions are going to be like, at least for the next 3-4 weeks. And so we got to adjust to it. Whether that means this is going to be the first deal we ever do over Zoom, so be it. That's just the reality of what's going on for the foreseeable future. So I pretty much co-sign everything Kunal said.
I mean, I'll add a third to that. I would say the headline that you got from both Nikita and Kunal was, investors don't really know what the F is going on. And so we're not really sure how to play it right now. And so I think that's going to make it tough for folks in the short term. I think the bar has gotten a little higher, and not even necessarily in terms of metrics or things like that, but just in terms of like the time that it's going to take. Things are getting drawn out because everyone is waiting to see how this plays out. So yeah, I think, don't fall into the trap that you need investors to make your business work. There's usually some things that you can keep pushing forward on without us. And if you're reliant on capital, that's usually not a great position to raise in anyway. Two, as often as you can, like do the research on who you're speaking with so that you can tailor your introduction. So, when you are hitting up Kunal, like make sure that you're talking about the sort of metrics, the sort of stage sector, or if you're hitting up Nikita, talking to her about why your tech is super weird, which I think is the right vector to be investing at seed anyway. And then, three, I think the reality is that warm intros help a ton in every industry, and it's not necessarily the most admirable part of VC, but anything where someone is a gatekeeper usually means there are many more people at the gate than you're able to let in. And so if you do have a connect with someone that, is one of our portfolio companies or, is connected to us, like I would say use it and call on those people in your network. And then, be creative and use things like Twitter, like we were hearing earlier from Michael.
That's right. Using all sorts of social media, try to kick in the door, the back door, the side door, whatever it may be.
Exactly.
I guess that kind of leads to me like being creative, getting to you. What are, once they get to you, once they send you a deck or whatever it is, what's the qualities that you see in them that maybe sparks your interest? Is it just because they're so focused on the problem at hand? But qualities of founders or operators that have succeeded in your portfolio or you've worked for in the past, that you've worked with in the past, that maybe you could share has worked. And I'll let one of you jump in to take this spot here.
Do you know the matrix for Dungeons and Dragons characters where it's like lawful good, neutral good, chaotic good, that sort of thing?
Yeah, of course.
So
who doesn't know that?
Yeah. So I think, one of the archetypes that I've found is really powerful in the entrepreneurial world is chaotic good. It's the person who really wants to make a positive change in the world, but doesn't really know how to take no for an answer. And, to take the words from YC, is relentlessly resourceful in reaching those goals. And so, the sort of person that I think we end up gravitating towards are these almost maniacal characters, but for the sake of a better world. And so they're usually hyper-focused on their problem. They usually have some sort of unique insight into their problem. They have some secret that they're holding on to that someone else hasn't figured out yet. And they're usually super magnetic, and not in a way where there's, a reality distortion field around them, like an Adam Newman who can make people just throw money at them and, beyond reason, but that they could be an incredible recruiter, an incredible holder of the vision, and have that sort of ability to take this tiny dream to something massive. So that's the archetype that at least I think is one that I like to look out for.
I like that. I'm just going to point that out. Relentlessly resourceful, I think, is a gem that I'm going to take away from this. It's pretty good.
Not my words. I have to say that's from YC. So you have to credit them for that.
Okay. Nikita?
I think just to add on, because I think those ones are really, really strong. People who are very aware of their weaknesses is a really strong one. You can't be everything as a CEO and a founder, and knowing what you're good at and knowing what you're not as good at and identifying those gaps and knowing that you need to make sure you're hiring for those roles. Or if this is a character flaw, like say, you're not as timely on things, making sure that you have people around you who are going to augment all the good stuff. And then for all the bad stuff that you have, kind of fit into those slots and make you and your team overall, better. I think an RRE bias and one that has served us quite well is backing people who really, really know their space. I think this Mario was getting to this when he was like really like that secret insight, that special sauce. For us, it's really, we have, kind of hit it out of the park in terms of returns and seeing a company grow and thrive when it's, a repeat founder in some ways, and one who has just been in the area that they're focusing on and knowing acutely that problem and just doing everything they can to solve them. But it's funny. We see founders who are very, very different types of people. There are some founders who are just very quiet. They're not really bombastic. They're just, kind of focused and people you would trust with your life. Like I say this about some of our founders. If I got into a car accident, they might be the first people I'd call before, my family or even before the hospital. That's how much I trust them. And then there are these really like magnetic other types of founders who I love and want to like grab a beer with. And those are perfectly fine. And you see founders of many different types of qualities that thrive. So I think when you strip back those types of outward characteristics, what is underneath is really what we're trying to get to. And you do that to an extent through, this process of getting to know a company. You get a lot out of it as well during your diligence processes and talking to people that they know and people that they've worked with.
Nikita, just to stay with you for a second, I think there's a problem when, maybe it's not a problem, but when a lot of founders are looking to approach you or Kunal or anybody else, and they want to show that they have that insight or that experience and they are, the smartest person in that field, when they approach you with a cold email or a warm email, it may be overdone and explaining the process of what they're doing too much. Is there like a fine line in between, saying that I know my stuff, I'm communicating it to you, but it's, does that make sense to you?
Yeah, I think that not always does it come out in a conversation, but even someone's qualifications. If you've worked at, two major cybersecurity companies, I'm using some of the example. If you've worked at Sysdig and Twistlock ignoring if you do or don't know what that is. If you've worked there as a security engineer for let's say 3 years, I know you're an expert in Kubernetes because there's no way you would survive at those two companies without doing that. And if I see someone who's worked at healthcare companies in New York, I know that you're going to have insights on healthcare and Medicare and Medicaid or working with employer-based insurance, et cetera, that somebody who doesn't come from that background has. It's those types of qualifications that are helpful. I also think it's pretty easy if you're creating a very clean deck or even mentioning it in one bullet note in an email, I'll see that.
Right. That makes sense. And Kunal, we're talking about qualities of founders that are, that stand out. You've written 2 books about these types of people. Give us some.
Yeah, for sure. So I think Nikita and Mario just really nailed it on kind of what we're looking for with founders also. I think it's pretty similar. So what is the kind of story that they have? What led them to that problem? Why are they actually doing that? They're relentlessly resourceful, being good storytellers, kind of that history of whether they were operating in healthcare or they were operating in cybersecurity before and why they're building this. I think the other thing that we're looking for at the Series A, we'll always flip to the page of the founder and see why they're building what they're building and if they have the experience to do it. But I think we start to care more about, does anybody else even believe that you're working on a problem that's worth solving? So, and you see that through the graphs, you see that through the revenue. If they're building an enterprise SaaS business, and you're at a Series A and 4 out of your 5 pilots have churned off, then you were building a problem that only you were facing, or you just didn't find product market fit. So I think that's what we're looking more for, is knowing this founder had personal experience, like they just mentioned. They took that and they productized it. They did all the research that was necessary, but did they do enough customer discovery to know that if I'm selling this, people will actually give a shit about what I'm going to put out there? And I think that starts to show up very clearly in the Series A and Series B, that we start to know if a company has caught fire early on. And if they haven't, what is the narrative behind why they did it? And what kind of roadblocks or what pivots have the company made in order to get there? So I think that's what we're looking for, is the founder humble enough to also say what went wrong? There's a lot of founders that they won't directly lie, but they'll gloss over facts and they'll hide things and they'll disclose it slowly, and then you slowly get away from it. I'd rather have everything up front and just know all the dirty laundry if we're building a relationship over time, exactly what your business has gone through and why it's gone through that, how long it's been around, and what's caught on. So I think some of that transparency too is just another quality to add on to what they were talking about.
That's great. That's great. I just want to make a reminder, if anyone has questions that I'm missing, I'm sure there's plenty of them, put them in the comment section, and Mike, CEO of Entre, will ask them at the end. So networking, we're at, Entre is a networking event, right, for entrepreneurs, by entrepreneurs. Can you give some tips, tricks, or whatever it may be, on how you network? Obviously, things are a little bit different now. We are not in the same room. We can't all meet, but let's just say, whatever it was. How do you network? Who do you reach out to? Do you have techniques of working a room, anything like that? But Mario, why don't we start off with you?
Man, I do not have great tips here. I think I have plenty of room to improve in this respect. So,
or even, and just to make a point, or even following up, if you meet somebody or a founder, so in that line of staying connected with everybody.
Yeah, I mean, I think the best advice I could ever give is that you should probably try and listen more than you speak. It's hard in this format to demonstrate that quality because I'm, supposed to speak a bit. But in general, I think the deepest connections I have with people that go beyond the transactional are because I'm genuinely interested in what they're saying and their point of view, and they show me the same respect. And so, to that end, I would say I'm probably someone who prioritizes fewer, deeper relationships than many maybe looser ties. And so the way that I build more of those deep relationships is by speaking to people who I'm close to in the industry. So Kunal being one of them, and would be like, who are the homies that you like to jam on deals with? Who are the startup founders that are super smart and, have a really interesting view of the world? And he would probably introduce me to Nikita, and then I would be super interested to hear about, her life at Oscar, and, we're both Columbia folks. And so I guess like finding information leaders or, people who you really trust and using them as a little bit of a filter.
I like that. Well, let's naturally go to Kunal. You got the shout out there. So.
I think he just actually said it best. I mean, I think I prioritize that as well. Like even on the investor side, if we're networking or kind of working, I don't find those big investor networking sessions that useful anymore. I think I found like 5 or 6 people that I really enjoy working with, and then I keep trying to find more that I can bring into that and work with them. And what kind of given it's probably a lot of founders on here, I think what I had done wrong on a networking side, and you have to realize it's a push and pull. Like as VCs, we're constantly trying to network with the founders that we want to invest in, and we're doing the same exact tactics. Maybe whether it's like cold LinkedIn emailing them, or we're trying to find a personal narrative and a connection to them, or a warm intro and all that stuff. So it's going both ways. It's not like anybody holds the power here, but I think when I was a founder and I was trying to reach out to investors, I was trying to do the exact opposite of what Mario just said. And I was trying to go for volume, and I was trying to hit up as many investors as possible, trying to get a check. I'm just seeing each one as an ATM. And basically like, I'll input my business plan and hopefully cash comes out. And that it's just not effective. So I think if I had spent more time kind of nurturing and building a relationship with some of the investors, and I know that's counterintuitive to what a lot of the founders here are probably feeling, where they need to raise that money right away. Do it in even a shorter period of time. It's not like you have to build that relationship over a year, but at least find the investor that probably, like what Mario just said, is like Oscar or Columbia. Like he's got 2 touch points now with Nikita that someone else probably doesn't. And working on that, or at least finding out that if I was building a media startup, why am I reaching out to healthcare investors? So I mean, on my LinkedIn, I get like probably 100 cold LinkedIn requests. It's not a vanity metric, but it's just founders from Serbia and founders from Russia who are like, can you invest in us? But Hearst doesn't invest in those countries. So I think it's just trying to figure out exactly why are you reaching out to that person too.
That's good. Nikita?
I don't know if I need to add on to that.
Nikita?
I think that was pretty good.
So, all right, that's fine. Yeah, just become friends with Kunal, and he'll point you in the right direction. And you're good. That's the hack.
Keep flooding.
No, I like that. Let's talk a little bit about COVID. Before we talk about COVID, Kunal is getting his bookshelf is organized by color.
I just saw that comment. I was going to screenshot that.
That's excellent.
She gave me a lot of comments about that.
More impressive than anything today.
This is why we haven't made investments in a while, because I'm color coordinating my bookshelf in quarantine.
COVID, coronavirus. What are you telling your portfolio companies right now? Just hang tight. We're there for you. Like, what is this conversation you're having, with these founders? Nikita, why don't you start off? Because
sure. There's no really hanging tight. It's very much like there is a situation. You need to know what to do. If it means don't do anything and keep doing what you're doing, great. But in almost every single circumstance, that has not been the case. We have essentially segmented our portfolio companies into ones that, there are problems right now on fire, whether that means they needed to do an internal round raise, or they needed, to unfortunately go through layoffs, or if they had to apply for the PPP. We had to do all of that over the last 4 weeks, figuring out who fit into that category and who didn't. There's a lot of rejiggering of scenario planning, a lot of going back, because, every single year you essentially map out these are operating plans. This is what our financials are going to look like. And almost every single company had to redo that and come up with many more scenarios. So that was that. Some companies have even had to pivot in the last month. We have a seed portfolio company called Branch that helps companies scale up and scale down in a physical space. And now they've had to completely pivot and go direct to consumer. So if you're setting up your home office at home, use Branch. But pretty much every single company, and I'm speaking beyond our portfolio, has had to go through this exercise.
Yeah, absolutely. Mario, why don't you jump in?
Yeah, it's funny. So I actually just talked with the Branch guys last week and wrote a little piece on their pandemic pivot, which was super interesting. They're great, and definitely some cool work from home gear. I think similar message. Look, we've been trying to help folks navigate PPP landscape to the extent that that's useful for them or relevant. I think the message is like, listen, batten down the hatches. We could be here for a while. A lot of the information that we're looking at suggests that like this really could be a pretty long-term issue. Maybe we'll get some loosening of restrictions, but the hammer and the dance idea that has been shared of like, tightening restrictions and loosening restrictions seems likely to happen. So I think folks have to be prepared to be super nimble and super lean to give themselves as much runway possible. And so, no real magic to it, but just sort of, now is the time for the grit and resilience that so many founders, I think, have anyway.
Yeah, I think similar. I think we're looking through kind of financial models and basically saying the same thing that I was saying when a company is approaching us right now is, if this goes on for 3 months and revenue dries up, what does it look like? How long can they last? If this goes on for 12 months, what does that look like? We are preparing some companies that certain revenue streams are drying up or going to dry up in a recession, or if the lockdown continues. But there's only so much that you can do as an investor, and I think that's also something that we have to be cognizant about. We're trying our best, but the founders are the ones that are actually doing it, and we're trying our best to be there for them. So we're playing it all out.
Yeah, Kunal, just to stick with you, what are some of the best resources? Are there any resources that you're sending out? The newsletters, or like, how are you keeping everybody, and this kind of goes for everyone, anyone who wants to jump in here, but some of the best resources that you're giving them, or websites, or whatever.
Yeah, I can't point to specific websites, but I think one thing that's actually what I've noticed be very helpful now more than in the past was that when we do our kind of Monday morning meetings as an investment group, we've got about 12 different investors in Israel, China, UK, and the US, and internationally, everybody's facing the same problem. So I guess one similarity that we're seeing is like, okay, this is working for a Series C company that we've invested in. And then we go and share that with our founder that's a Series A. So I think just having the network effect of having a bigger portfolio with a lot of different companies and different industries facing this, and all of them finding their own solutions, and then us sharing those solutions across the portfolio, has been something that I thought has been pretty effective. And I've really seen kind of where the VCs can add value now in times like this, but I think it's more just knowledge sharing. I can't point to specific links or resources. I mean, we've been relying on a lot of the law firms and kind of banks and things like that to better understand the economic disaster relief loans and PPP, and kind of thinking about some of the optics around that. But yeah, I mean, I think I can't really point to any links right now, but I've been reading Mario's newsletter, pretty active.
Right, newsletter, exactly. You guys want to jump in with anything that maybe stick out or helpful?
Nothing super secret. I mean, one of our partners just went really deep on the PPP stuff and sort of put together a bit of a playbook for our founders. But beyond that, I haven't seen a particularly useful public guide, although I am sure there are many.
And internally, we have, and these are resources that have always existed for our companies, but given the circumstance, sometimes you don't use them, sometimes you do. We have guides around pretty much everything from hiring to if you're putting together a database for the first time, what should you be using? We try to go pretty deep and pretty niche. Not that all of them are relevant to right now, but to the extent that they're there, people have used that exact same thing on the PPP. Mario, we had one of our partners and our head of platform focus on that. We had a bunch of people asking us about, hey, is AWS going to, decrease anything at this time? Because we're not in the office and we're making some changes. Can we, use our power in numbers to try and, decrease rates and things like that. So pretty much every problem that the portfolio has, that if they think RRE can help, we will get that message somehow and we'll do whatever we can. The answer sometimes is we don't have the answer, but we'll help you try and find it, which we're learning along the way. Even though we've been here for many, many years, there's always going to be more to learn.
And sectors that you see coming out on top right now, I mean, I hate to pick winners or losers or whatever it may be, but I mean, are there any particular sectors? I mean, Nikita, you're in healthcare, health tech you're investing in. I'm sure that's a pretty hot topic right now. What other types of companies are you seeing kind of emerge? I mean, the last recession, right? There's some of the biggest names came out of that. Hopefully some more can innovate and rise from this. So, I mean, what are you seeing, and what can you say to these founders to stick with it or maybe pivot to try to do
I was writing a bunch down earlier. A lot of them are relevant to the spaces that I work in. So I'm sorry about that in advance. This is not to say if you're working on something else that it's not relevant, but these are the ones I constantly have my eye out for. I think you're completely right with healthcare and spending a substantial amount of time there. I think it's only amplified the importance of home health and telehealth, which is already spaces that we were investing in, but one of our, for example, healthcare interoperability companies, Redox, has just continuously done really well during a time like this, because it's hard if you're a healthcare application to get connected to an EHR, which is the electronic health record system. So just generally keeping in track of that space. Cloud development and DevOps tools are always doing pretty well, and we've seen a bunch kind of emerge from stealth. We've also seen a number of companies actually adopting them in a time like this where everyone's going remote. So we're paying a bunch more attention there. Relatedly, cybersecurity, anything that's going to help with the remote work environment. I'm sure Mario and Kunal feel the exact same way. Seen a ton of companies in that space already, and ones that we're even more excited about backing. Embedded finance is only going to continue to get bigger and bigger and bigger. So these are basically ways that software can take a payment on either the issuing or taking side. So right now, surprisingly, only 8% of bank card volume is through software. Super surprising. We estimate, and we worked with Bain on some research on this, it's going to get to about 40% in the near future. Makes sense with all the trends we've been seeing. Yeah. So embedded finance is another space that we're excited about. And a lot of entertainment, gaming, esports, we're still paying attention there. Everyone's been doing it as we've been at home. So that's just looking at what we're doing as consumers and seeing if there are new opportunities there.
Yeah.
Yeah, I think exactly what Nikita just said. I mean, she touched on a lot of the really good ones that we're looking at too. Remote work, gaming is another big one that I think we're spending some time on. I think things that what's going to be hard too is that a lot of the investors, given all three of us probably thinking the same thing, and there's hundreds more, as valuations will just shoot up in these areas. But some of the other areas that I'm also interested in are parents are going to become very they're going to understand that remote learning is a huge issue during this time. And are also people going to be scared to go back to living kind of the way they were in the past? So what kind of extensions, like I guess founders and VCs have time to be very creative in what areas they're looking at. I think it's a great opportunity to try to start something, solve that. But remote learning, so ed tech, there's a lot of opportunities since the infrastructure hasn't really been put in place. And I think a lot of the areas that Nikita just mentioned, they continue to be interesting. I think on the downside of it, where areas might become less interesting to us too, are where do budgets dry up? So if you are an enterprise SaaS company selling B2B, kind of what Nikita was mentioning earlier on is like, are you necessary? Like, do you need to exist? Will budgets dry up in those companies, and will people be paying for kind of discretionary services that in a recession when budgets start to get tight? I think that will be an interesting one too for us, where we might start to lean away. So looking at some of those areas.
Yeah, I think that's a great summation. The only place I would add is, I don't know if this is even the right way to frame it, but religious tech. You know, there was an interesting study from Cambridge University which studied areas that had been hard hit by earthquakes. And the effect after that is that people who were directly affected increased their levels of belief, their sort of so-called religiosity, by up to 9 times the amount. And interestingly, also, it turned out to be hereditary. Their children also ended up believing much more strongly in different spiritual beliefs. Similar to 9/11, if you look at the data, 90% of Americans said they turned to faith to handle that. Tech is typically sort of steered away from that part of the world. But I think we might see a lot of it sort of pour in during this period. So, if you look at Zoom that's being used for services right now, for remote services, like there is, I'm sure, an opportunity for someone to create a Zoom specifically for religious services that, integrates donations and integrates with holy texts and integrates with the different hymnals that you're singing and things like that. Mental health during this time is such an important thing. For a lot of people, mental health is really tied to their faith. So apps like Hallow, which is a daily prayer app that, was funded, I think earlier this year, like I could see something like that really taking off. So the places that I'm most interested are like, what are the real behavioral shifts that happen, like maybe beyond even how work may be done. I think that's like for sure going to be a massive thing as well. But that's one sort of maybe more niche area that I'm taking a look at.
I like that. I hadn't even thought about that. That's really good stuff. Before we do the Q&A, I got one last question for all of you, and Mike will jump in with the Q&A portion of it. Can you give us your favorite story, investing story or founder story of someone who's shown grit, or someone who's just stood out, that founder that succeeded, or somebody who's got to the next stage? But I'm sure you have a story of one of these successful founders that is a great story. So I asked you to tell it. I don't know who one comes to mind, but maybe Kunal can start it off, because I'm sure he's got a billion.
Yeah, I had the first book I had published was a book called Disruptors, and it was all actually based on the first kind of 6 months. I was pretty pissed off as a founder trying to start a company, and then just realizing everything that was published about it was how easy it is to start a company at the time. And so I wanted to interview founders to understand kind of what struggles and failures they faced early on. So a couple of them, Scott Harrison at Charity Water is a really interesting one, but his story is pretty widely known. And then the other two, Vin Vacanti from Yipit and Nahal Mehta, no relation, who is at ENIAC Ventures now, but had 4 companies before this. So Vin Vacanti, I think what was interesting was over 3 years, he tried to start 13 different companies, and the first 12 failed. And then he finally started Yipit, and he did that over a week, I believe a weekend, for the MVP to develop that one. And I think what he was trying to say was that this overnight success story where everybody's always talking about that it was very quick to launch a company. The first prototype of the first business he launched took 8 months. And he just kept getting better at launching companies and testing them and doing customer discovery on whether people needed them or not. And I think Yipit's a profitable company now. It was venture raised and venture backed, and it's doing really well. So I think that's an interesting story of showing that it takes a bit longer to actually do it and succeed.
Yeah, some inspiration too. I don't know who wants to jump in here, Nikita or Mario. But
I'll quickly hop in because I just want to echo what Kunal said, which is, the idea that overnight success is possible is usually a myth. Overnight success takes a decade. And so the person who embodies that for me is someone who I actually just did an interview with, is Zach Raitano from RRE Health. And so, Zach started 6 businesses over, maybe not quite 10 years, but pretty close. Starting with a medical device, then it was a parking spaces app, then it was, a Craigslist, then it was a ghost kitchen for burritos. And each one, he sort of iterated bit by bit and learned something from it and just kept flexing that muscle. And then, now he's founded a company that is by all means doing incredibly well, scaling very fast, doing something really impactful, particularly right now. They were one of the first people to roll out COVID-related testing and diagnosis. So he's, I think, a particularly good model of, from the outside, things often look a lot easier than they are. And usually even the great folks need a few at-bats to get the home run.
Nikita?
Yeah, I think there's a lot of similarity to stories I would tell, very similar, about founders who start companies that quote unquote fail and then go on to, start a successful one that just knocks it out of the park. The Honey, there are great examples of this in the near future that just had an amazing exit to Visa. So I think one, like internally, that is interesting. Was really about, I don't want to disclose the name of the company, but they also had a very nice exit and a very nice IPO. We actually had an investor on our team that disagreed with the strategy they were taking. And the two just like butt heads in terms of like, you're doing the wrong thing. No, I'm doing the right thing. What about this? What about that? What about that? And I'm glad he did not take the advice of the person on our team and continued doing what he's doing, because clearly he IPO'd and things worked out super well. But I think that the takeaway from that is that sometimes investors, like, we're not always going to give the best advice. And that's why we're just one of many people that are around the table of a successful founder and founding team. Just like an ethos that I learned from that. I spend, and Mario said this earlier, as much time as possible just listening, because you learn a tremendous amount from just doing that.
Awesome. Mike, are you going to jump in here with the Q&A portion? Thank you, guys.
Thanks, Charlie. Appreciate it.
Yeah, this was awesome. Thank you, Charlie.
I think I'm in. Am I back? All right.
You're in.
This is awesome. I was loving this the whole time. You guys were dropping some knowledge. This was amazing. And we had a bunch of questions come in. So if you guys have questions, like, please keep asking them. I was trying to gather as many as I could. A couple ones that I want to get into real quick too. And I know, I think you kind of hinted at this as well. We had someone ask about, how do I find investors in the biotech or, drug industry? And then we had someone else, what's the best way to approach seed investors? And I think one thing for us that's worked really well is like making sure you find investors in your specific industry. So if you guys could, I think it'd be really helpful. I think a lot of people are wondering too, what's the best way to maybe even just approach an early stage investor or VC? How do you guys like getting reached out to, right? Is it Twitter? Is it cold email? Is it LinkedIn? Warm intro is obviously usually kind of what people prefer. But how should maybe people, if they don't have the network, reach out to you? Should they send you their deck first? Should they try to make another connection to you? What are your guys' thoughts on this for people who are, interested in connecting with investors, but maybe don't have the network? how should they be reaching out to you guys or to other investors for that matter too?
So I can start. I'm going to drop it in the chat, but there's this Google spreadsheet. I hope I just shared the right one. But it's a list that a couple of investors put together a couple of, I think maybe 2 years ago, and it stayed pretty current with all the investors kind of in New York and beyond. And it's broken out by what stage they invest in, what sectors they're interested in, and what I think it is pretty current, but it tells you kind of what their average check size is. So to touch on your question about healthcare investors and biotech, you can go down this list and kind of start with those. And it keeps it a bit more focused. And then the other list also has stuff on kind of how you should approach, what the best practices are for approaching people. There's another resource. There's a guy named John Gannon publishes a blog. And on there, he has a ton of resources of different blog posts and things that VCs have put out there and what they look for when a founder is approaching them. So I think going through some of these resources and looking at the metrics and finding out which specific business you're building and as it relates to some of those links, go through that is probably the most helpful way of doing it. And then obviously other things like the warm intros and all that. But I think this would probably be a much more concrete way of finding out who specifically you need to be going after.
Yeah, this is awesome. What about you, Nikita or Mario? How do you guys like to get kind of approached, or what's the best way that you found that you kind of like people to reach out to you, or how should they send you their deck and get introduced to you?
Yeah, I would say for a cold inbound, the probably best thing for me is a LinkedIn message that is 1 or 2 lines and probably includes a link to your deck. That's probably the clearest way to paint the vision for your company in a way that maybe doesn't look like a massively long message. Obviously, sort of tailoring it to make sure that, as Kunal mentioned earlier, that it is relevant for charge. And then in terms of finding sectors that you're focused on, I would say Crunchbase. It's a very complete resource. So if you want to go on there and search biotech funds, you can get that, or you can look at companies in your space and see who they've raised from. Those are the folks those are the techniques I would use.
Great.
Yeah.
How about you, Nikita?
I pretty much agree. I will take, any type of reach out, whether it's over Twitter or over email or over LinkedIn. I think brevity, as both Mario and Kunal said, is really important, and really highlighting the 4 things that are I like 4 bullet notes if you can, the 4 things that are going to make me click your deck or click the website. That's all I really need. And I think it takes, the same amount of time to look at someone, know if you're attracted to them. It's the same thing for if you send me an email, send me a deck. Is it attractive enough for me to click it?
Gotcha. Yeah, I kind of mentioned this at the beginning of the event, but it's kind of weird how active VCs are on Twitter. I didn't realize it until literally last year. And that's actually worked kind of the best as far as social media platforms go. That's the best way that I found. And it's not necessarily you're just DMing them, but you're kind of commenting on their posts, or kind of just getting your kind of name out there and everything. It's pretty interesting how that's worked. So we have another question here about kind of valuations going on right now. I know I've talked with a lot of investors and even founders too. People are, some people are even taking down rounds. Some people are opening up their previous round and keeping at the same valuation. What should, if you guys have any advice on how founders should be approaching their current valuations, if people should be, maybe they're thinking about raising a seed or a Series A or Series B, maybe they kind of do a seed plus, or maybe they just do, open up their other round. Do you guys have any advice for people around how they should be maybe thinking about valuations right now, because they're probably not going to be able to get maybe what they want or what they were planning to this year?
I personally think that you shouldn't be, if you don't need to raise right now, don't raise. I think you're raising a period of uncertainty and you're going to get kind of terms that aren't great, right? The market's not in your favor right now. But I think if you do need to raise, also you need capital on your balance sheet right now. And the choice is either, do I let my business fail if this goes on for another 3 months, and am I happy with that, or do I just accept whatever terms and down round, as long as it's not like from a really shitty VC and who's extremely onerous and just going to be a toxic to your company. I think you're sort of in a position where what does it take to keep my company alive? And I personally made the decision to kill my company in that point when I was doing that. And maybe it's something I regret. So it's like, it's a balance that you need to pull on figuring out how desperately do you need the cash right now and what terms are you willing to accept for that. But I don't think the good VCs are going to really try to take advantage of this time either. Reputation matters a lot.
Agree 100%.
Nikita, anything?
I think there are general ranges in which companies get valued, particularly when you're raising your first couple rounds, like your seed and Series A. They all tend to be in the same kind of range and the same size of, and I'm saying this is like an average, the same size of the amount of round the capital that they're raising. So I think if you don't have the resources to employ like Cardiff, for example, particularly when you're later stage, they help do a lot of valuation processes, particularly because things get complicated in terms of allocation and figuring out when you have 100 different investors, and that happens when you're Series D, Series E company. How does the original investment map out over where your current valuation is and how much ownership people have? So if you don't have that, there are resources, there are blogs, there are Medium posts out there that can be really informative for how you can make some of those decisions. I think a lot of it goes off of revenue, projected revenue, kind of how this market is doing, et cetera. But there are some general benchmarks out there that you can find.
Okay, great. Yeah, it seems like you guys kind of mentioned this too, there's just so much uncertainty right now. And if you need the cash, like, you got to keep things moving forward. But Kunal, I think your approach too is, if you don't need the money to stay alive, it's probably better to wait. We have another question here about kind of the barrier to entry, kind of with the current economic state, right? Has this, do you think, lowered the barrier across the country and kind of leveled the playing field rather than just like everything focused on the Bay Area and whatnot? Have you guys seen anything? Have you noticed anything across like the fundraising market as far as like, it's obviously always been easiest to raise like a seed round or, starting out in the Bay Area. Now with everything going on, do you think it doesn't matter so much anymore if you're based in San Francisco or the Bay Area to raise a seed or Series A round?
I think they'll be good and bad. I mean, I think there's going to be the good part is that, maybe folks, because everyone's going to be working remotely, are going to be less worried about you acquiring local talent if you're a San Francisco-based business, or if you're a business outside of San Francisco, maybe you're not in a tech hub. Maybe the fear that you're not going to be able to build the engineering resources that you might need, maybe that's a little bit lighter. The bad part, I think, is that as VCs in some respects pull back, and I think there's going to be statistically a pullback in terms of dollars put into this ecosystem, there's probably going to be a bit of a flight to quality. And in many respects, I think because VCs are pattern matchers, that means that they're going to be looking at founders that look like the last generation of great founders, which for the most part may be, Stanford bros in SF. So that's like definitely not what we're particularly interested in. That's part of the reason we are like focused on New York and East Coast and secondary markets beyond that. We try and do as few deals as possible on the West Coast, simply because we just don't really have the bandwidth to cover that appropriately. But I think, that's the downside case for folks that aren't in SF.
Gotcha. Okay.
I think that covers it.
Yeah. Fantastic. Okay, I'm gonna ask one more question here, and then we'll wrap up because I don't want to take up much more of your time. We appreciate you guys for joining us for this. So, last question. How important is IP, trademarks, patents, and do you guys take into consideration any of that during your investment?
I think for Series A and Series B, it's usually already sorted out at the seed stage, at least for the stuff that we've seen kind of in the deeper tech stuff on transportation mobility, at least. We will look into it, but I mean, we're not lawyers, so we usually get kind of Hearst's legal team to look at that, whether everything is tied away, but it does matter later on. But then there's also companies just violating IP and trademark all the time. And it's like something that I mean, we take it seriously, but it's the last step that we take seriously almost. We first see if everything else is tied away.
Gotcha. Okay. How about you guys? Does that kind of sway your investment decisions at all? If someone has like great IP and all that stuff, or maybe if they don't have so much IP?
I think it totally depends on the space. So if you're doing something in biotech, super important, or at least it could be super important. And so having a strategy around that and being robust in protecting your IP can build genuine asset value in your business. I think sometimes founders maybe have it in their head that, you know, they're building a software product that maybe has something patentable, or like a hardware product or a CPG product that has some small thing that, you know, theoretically is patentable, but doesn't really build the asset value of your business. In that case, I would say like save your time. It doesn't particularly matter to us.
Okay.
Yeah, I think it can also really help. As you know, one of the things Mario mentioned, we're investors in a couple of robotics and 3D printing companies, and MakerBot was acquired a couple of years ago, and that was super important for the acquisition, that they had this really incredible patented 3D technology. That while there were other players in the space, a lot of them that still exist today, there were some very specific reasons that a company like MakerBot got acquired over some of the other players that are still out there with huge valuations. But are they going to IPO? Who knows? And I think it's really important. Like when one of the, you know, the title is Angel Round to IPO, there, you know, it's a stage in between, which is actually one of the biggest stages, other than, you know, companies unfortunately closes at some point, which is acquisition. And you want to put yourself in the best possible position to getting acquired. And one of the things that we say for a lot of our companies is, let's say for whatever reason, the business isn't working. But if you have a really fantastic product, really great technology, that is going to be an asset in and of itself that people will acquire.
Gotcha. Yeah, that makes a lot of sense. Okay, there's one more quick question here. Thoughts on crowdfunding, equity crowdfunding? It's becoming more and more popular now. Seed Invest, Republic, WeFunder, Start Engine. Have you guys come across this at all with some of the companies you invested in? Good idea, bad idea, depends on the company and the product. What are your thoughts on this before we wrap up?
I think especially now, get capital where you can get it, and try those channels for sure. There are some of those crowdfunding platforms that now have a little bit of a bad reputation where they don't filter much in terms of who they're investing in. So I think do your diligence on people who have worked with them in the past and how easy it is for them to raise follow-on funding. Because there's one of them that I often get deals from, and I often write off the company because I know that crowdfunding doesn't do that much work and diligence into the companies before, and they've been kind of negligent with companies. So I think just do your work and understand if it's a good platform.
Yeah, agreed. There's like a little bit of signal risk, but I think if that's like one of the more viable options for you, go for it. We've definitely invested in companies that have raised money on places like Republic. And I think it can genuinely be value additive in places where you're selling something that's like really consumer focused and you want to get people bought in. So I think they serve an important role.
Yeah, I think a lot about like the kinds of investors you bring on board is signaling, and brand can be helpful with branding. It says a lot if you have a very specific type of consumer investor or a very specific type of enterprise investor. If they've backed you and you're going out to market, you're trying to get customers, I think it's a really strong signal. So it's like one thing for why you might have a institutional fund or a specific type of angel backer versus using, or at least in addition to using one of the platforms like a Republic, like a Seed Invest, like a Vincent, and there's a lot of different ones. I haven't done and spent as much time looking at the differences between any of these platforms. I don't know if some give you better or worse terms, and I think if you're using one of those platforms, that's a really important thing to check in with, because you want to make sure that you as a founder are as protected as possible. And I think that's something to look into, because I'm not really sure.
Gotcha. Okay, fantastic. Well, thank you guys so much. Charlie, anything you want to add before we wrap up the panel here? And then we're going to move over to the networking section, and you guys will actually be able to FaceTime. I think we lost Nikita. So, well, thank you, Nikita. He had to run. So, anything you want to add, Charlie? Or are we good to
No, I think we're good to wrap up. I mean, I was going to ask Nikita her words to live by, personal mantra, ethos. We do end up off like that a lot. Well, let's hear Mario and Kunal out, and then best places. Okay. Your personal mantra, ethos, and then also just like best places possibly to find your blogs. And maybe Kunal, you could drop a link to the book that you just released as well. But personal mantra.
For sure. So the mantra I would say is maybe most useful for this group comes from James Baldwin, the author, which is those who are saying it can't be done are usually interrupted by others doing it. And I think that's sort of the mindset for great entrepreneurs. In terms of places you can read more of the stuff I do, go to readthegeneralist.com, just a weekly newsletter, and highly recommend Kunal's book.
Great book.
Great book. Thank you, guys. I left I'll point them back to your podcast with mantra. I forgot what I had said there. I don't have one personally right now that I'm thinking of.
Go back to CharlieNYC.com, find the podcast. Happy hour is good for right now. And then we can
I was trying to find maybe watch Michael Jordan's for some inspiration, his documentary or something. I appreciate you guys putting this together, and it's always great seeing you guys.
Yeah, really enjoyed it.
Yep. Okay. Thanks so much, guys. Thank you, everyone who tuned in. Like I said, if you look on the left-hand side, you'll see a networking section. We're going to everyone go in there, and then you'll actually be able to FaceTime with the other attendees and stuff. And we'll do that until basically whenever, like 8:30 or so. But Kunal, Mario, Charlie, thank you guys so much. Really appreciate it. You guys crushed it tonight.
Thank you so much.
Thanks so much. Really enjoyed it.
We can do this in person sometime in New York, maybe.
Absolutely. Yeah. Let us know when you're next in town and when that's possible to do again.
Fantastic. All righty. Thanks, guys.
Be well.
Yeah. Thanks.
All right. I think we should be done here. Like I said, let's move over to the networking section, and you guys can FaceTime with each other.